South Korea's central bank left its key rate unchanged. The BOK lowered its earlier growth estimate for 2018 due to rising economic uncertainties at home and abroad. Hye-sung helped us look beyond the digits.
The Bank of Korea on Thursday lowered its growth forecast for the local economy to 2.7% from July's 2.9%. That would mark the slowest growth since 2012.
Our revised growth forecast has been lowered to reflect second quarter growth, but it remains in line with the potential growth rate. We forecast inflation to be in the mid to upper 1% range.
The central bank forecasts growth to decelerate on falling investment and slower export growth due to the escalating U.S. China trade spat. It says consumer price inflation will hit 1.6% this year on rising agricultural food and oil prices, closer to its 2% target. Citing weak job growth and trade uncertainties, the Bank of Korea kept its benchmark interest rate unchanged at 1.5%. The number of newly added jobs in the country fell below the 100,000 mark for the third consecutive month in September. But growing household debt and increasing capital market risk is adding pressure on the BOK to lift rates. 2 of the bank's 7 board members voted to raise rates on Thursday.
We're seeing higher financial market volatility. Following the third U.S. rate hike last month, emerging markets and Korea's financial markets saw their stock markets tumble. Foreign investors sold off Korean bonds and the won weakened. If financial instability continues, it could result in capital flight and affect Korea's real economy.
October's monetary decision leaves the U.S. interest rate 75 basis points higher than Korea's. With the Fed expected to raise rates in December and Korea's economy to slow down further in 2019, experts say the Bank of Korea is highly likely to raise its key rate next month in its final monetary policy meeting this year. Hye-sung, Arirang News.